Well, Mandy and Nick, I'll just take your cues as they go until we get into it.
Sounds good. Looks like we have people joining us. We'll give it just a second and allow everyone some time to get in before we get started here. All right, so we have 11 o'clock and let's get started. Hello and welcome to today's Wyoming Community Navigator program. We are so glad that you have joined us today. My name is Mandy Bailey and I am the Advising and Education Director here with the Wyoming Community Navigator program. I'll be a facilitator today, working behind the scenes to assist as best I can with any technical difficulties or questions you might have. So hopefully we don't have any. Just to give you a little bit of information about the Wyoming Community Navigator. The Wyoming Community Navigator is a program funded by the U.S. Small Business Administration, and it utilizes the Wyoming Entrepreneurial Support Network to reduce barriers all small businesses often face, including those owned by groups such as veterans, women, and those from rural communities and communities of color. The Wyoming Community Navigator program uses a hub and spoke model to pursue its goals. Through their collective efforts, the hub and spokes provide training, mentorship, access to capital, and other resources to help business owners build resiliency and ultimately be the driving force behind Wyoming's economic recovery. Today, we have Vince Mockenstern with us. Vince is a CPA with 31 years of experience, and his career has been in leadership roles with large energy companies in North America. Most recently, Vince is a senior controller, and he developed a highly effective accounting team for a premier oil and gas service company. And so without further ado, I'm going to turn it over to you, Vince.
Well, thank you. And good morning, all the people that I can't quite see yet. I'm talking to you from Casper, Wyoming, where it's blue skies, a little windy, and a lot of snow. So I'd like to thank the SBA and the Community Navigator for allowing these programs to go on. It's been my experience that entrepreneurs can benefit greatly from the resources on their website. Today, I'm going to talk about basic accounting, just kind of the nuts and bolts to give you an overview. I don't know quite where your experiences with accounting systems, bookkeeping, but I'm going to take you through, first of all, the importance of laying down an accounting system right off the bat as you begin to think about your project, your entrepreneur led mission, or if you're a small business owner. It's just important to lay down a bookkeeping system right away. Just adopt that attitude, get that appetite to maintain your books and records. It just makes things easier, both administratively and from a peace of mind. So the second part of my presentation is going to be about accountants. There's just a myriad of different accountants and their functions. To name a few, there's bookkeepers, the basic. They're kind of the workhorse in the accounting genre, so to speak. There's also just good accountants, senior accountants. They're called public accountants. They're not necessarily certified. There are EAs, which are enrolled agents for the IRS, and then there are CPAs and their firms. And I'll explain exactly what those mean to you or should mean to you as we go through this presentation. The other thing I'd like to do is, I understand you can unmute and ask a question. I'm open to doing that throughout the presentation as they come to your mind, as long as we don't start walking on each other or talking over others. But I understand that's not generally a problem. So if you have a question about anything I'm talking about or have talked about, just either go to the chat or just unmute and ask the question.
I have a question.
Okay.
My name's Devin. I have a question about the difference between accounting and bookkeeping.
You know, I'm going to get to that. And if that question isn't answered specifically or to your liking, then we'll go back to it. But in general terms, there's not going to be a lot of difference as you begin bookkeeping and tracking your transactions. So we'll just put that off for a minute. Accounting is the language of business. There's a taxonomy, there's just words we use that some of the general terms, it would behoove you to just kind of open a book. There is actually an Accounting for Dummies. It's a publication that you can get. There are other books. And some of it is like anything, you just have to understand the language. You know, what's a general ledger? Well, what's a CPA? What's a transaction? So accounting has a language. There is a language. Accounting is a system that collects transactional data and organizes that data into useful information. I'm just going to say this, everybody can see the PowerPoint that's in front of you. Is that correct?
Yes, we can see it. Thank you, Vince.
Good. Okay. Anyway, it's accounting systems collect transactional data and organizes that data into useful information. Accounting information reflects the profitability and the financial condition of your business. If it's real time and you should be able to go to a balance sheet and say, yep, I owe this person this much money and I need to pay it on these dates. Or you would look at a profit and loss statement and say, yes, so far this month, it's looking good. Costs are down, revenues are up. Hopefully that's the case in general terms. Accounting information is useful to the business owners, but also to banks, suppliers, and your stakeholders. Accounting information is going to drive decision-making for you as well as your bankers. Think of a banker looking at your financial statements or your bookkeeping. Are they likely to make a positive decision for you, lend you some money, or provide you easier terms? That's all kind of the hidden story behind bookkeeping. Let me get over to this screen. Okay. So we talked about transactions. Well, what is a transaction? Transaction is the source of all accounting information. Think of a transaction as any event that impacts your business. You go down to the supply store to get some Post-it notes or some paper. That's a transaction that decreases your cash in the bank or increases a liability if you pay them on time. But transactions are just all the little things. Just think of your business, what's coming in and what's going out. Those are all transactions that need to be recorded in some way or the other. So it's just important to keep all your receipts, to keep all notes on transactions that may not have a receipt. So another example is the invoice for goods sold is a cash into bank and classified as a revenue transaction on your profit and loss statement. And we talked about perhaps buying Post-it notes. Those are also just another transaction. Transactions require a journal entry that can be either system generated or manually generated. So what do I mean by that? If you use, for instance, QuickBooks, that seems to be a real high profile software package. It's easy, it's intuitive. So you can go in and if you created a transaction, say you went to the shop to get some supplies for your business, you would take that receipt back, sit in front of your computer, turn on QuickBooks, and you would make a transaction that decreased your cash and increased your supplies or increased an expense. So the accounting cycle you can see next to the narrative are your transactions, again, are all the source. What's happening in your business? What's coming in? What's going out? Well, there's either a journal entry that you make manually, or sometimes the system is set up to record transactions automatically. What I mean by that is, if you have a recurring payment for a debt payment, for instance, you can just set a flag and that every month it's going to record that payment the way it should be recorded. Very sophisticated systems. There are very few general ledger transactions that are entered manually. Most things are system generated, either through processing invoices or whatever else comes through. So once a journal entry is made, you have to post that. So you have to make it a permanent transaction in your general ledger. Your general ledger is simply a catalog of every transaction in a given period. So you create a journal entry and then you post it, it becomes permanent. It's a record now. At the end of any accounting period, you're going to have a trial balance, which is essentially the activity for each account that you have. You would print that out. You would start at cash. You would go line by line and you can just see what has happened to that account. Either increases, decreases, and you can analyze and you can get an understanding of what occurred for that month. So your trial balance is a working document that is going to be your first glance at your results. A trial balance goes into a worksheet at the end of any given period where you look at your trial balance, the transactions that occurred. If there's something you notice that is not right, in a worksheet, you would make a manual adjustment to get it right. So we can get into accrual accounting. That's kind of usually what end of month adjustments are about. Accrual accounting is different than cash in that you recognize a purchase, for instance, but you haven't received the goods, but you have the obligation. I don't really want to get into that kind of detail right now, but if you have questions about it, let's talk about it. So the worksheet creates adjusting journal entries that are posted again and become a permanent record. Financial statements are created from your trial balance and general ledger. These are the results, a point in time, usually the last day of the month or the last day of a quarter, or certainly the last day of the year, where your financial statements tell the story of what you've done over the past, whatever period that is. There's a bit of art to financial statements and how to read them. As time goes by, you'll start to see the story within the numbers. You'll have expectations of what your financial statements will look like. You'll be able to sort out those expectations from the realities and make adjustments. And closing the books is just making that financial statement permanent. So unadjustable. So you just say, okay, this is the results for January. That's a closed month. Anyway, the accounting cycle. Is there any questions about perhaps the accounting cycle? Okay.
I'm not seeing any in the chat, so I guess we're good to move on.
Okay, good. Let me see if I can get rid of. The accounting model, just in general terms, is this. There are three financial statements. There's a balance sheet. There's an income statement that tells your profitability. Then there's a cash flow statement, which is essentially the product of the change in your balance sheet. It tells you where your cash came from, where it went. And you can see the debits and credits. You've heard of double entry accounting. Wherever there's a debit, there needs to be a credit. Debits and credits move across statements, but they act differently. For instance, an increase to an asset is a debit because you purchase more assets. So the second entry is, well, to get those assets, you had to give cash. So the second side of that entry is you deplete your cash with the entry. Okay, come on. Okay. So there's two areas to think about. This is just to put in the back of your mind. In accounting, in the accounting world, there's management accounting, there's financial accounting. So when we talk about management accounting, what we're talking about is you, what you're doing with your books in your business, who inside your business needs to know what kind of activity has been occurring. Management accounting includes budgeting and forecasting. I cannot say enough about budgeting and its related forecasting. So a budget is essentially at the first of the year, or as you approach the year, you start thinking, okay, what am I going to make? What's my aspiration for the year? I'm going to have X amount in sales. I want my cost to be essentially this. And I'm going to need some financing to get to that level of sales. So it's all written in a budget with numbers. And also there's a narrative aspect of budgeting. If you think about when you started your business, or if you're thinking about starting a business, you're really thinking about a budget. You kind of know what you're going to do. You kind of know what costs are. And that's good enough. Put that down on paper. And as you begin your business, start managing against that budget. For instance, well, sales aren't as high as I thought they would be. Well, there's an explanation for that. What is that? Is it because the market went away? Is it because I don't have enough vehicles to get my sales product out? What is it? It causes some action. The budget does. And it's not scientific. It's more of an art. You know what you want. You know kind of how to get it. Let the budget drive the variances. So you always want to compare the differences between your budget to your actual results. Bankers, by the way, love this stuff because they can see, or suppliers, because they're also kind of financing you, right? They love to see this kind of attention to your books. It just gives them comfort that you're paying attention. Management accounting is your revenue and cost analysis. So each month, each day, even, or whatever, your week, you're just saying, okay, revenues are about where I should be. Costs are a little high. What's driving that? See, all these things prompt questions to help you to adjust your sales. Price analysis for product and services. So are you selling low, or are you buying high from your suppliers? What can you do about that? That's management accounting. Financial accounting, on the other hand, is more about banking and your business relationships. They're formal financial statements. If you're a public company, or if you have certain covenants with your financing, there are generally accepted classifications and presentations for your financial information. And these reports go to your lenders, regulators, for instance, tax, your sales tax. You got to collect sales tax generally. So you're going to have a report to send to them. Also, your customers and suppliers are interested in what you're doing. Your customers, they certainly want to know how you're doing because you're a source for their business as well. We talked about 3 financial statements, the balance sheet, the income statement, and cash flows. I'll just go over that again. The balance sheet is a snapshot of your business position at a point in time. So the date of your balance sheet, say it's December 31st, 2022, that's good for that day. Transactions disrupt that, or not disrupt, but they change your balance sheet daily. So just keep in mind that it's just a snapshot, a point in time. It's going to list your assets, how many pickups you've got, how many big trucks you've got, how many printers you've got, or whatever your assets look like, they should be recorded as a permanent record. So assets are what you own. There's also a record of liabilities, or what you owe for what you own. That offsets the assets, a liability does. So you have a car worth $1,000, you owe 500 against it. Well, your equity is going to be the difference between those two. So equity is a record of what belongs to the owners, or its assets minus liabilities. The income statement is a current period transaction summarized into meaningful categories. So it's really important when you think about an income statement, what's important to you, what drives your business? What are your cost drivers? So fuel may be one of your biggest costs. So that would be a line item in itself. So repairs, you're going to have different cost categories, and you can get a canned chart of accounts is what a listing of your accounts are, but don't use that unless they make sense to you. So remember, you're driving the business. You need information that helps you, not anyone else. So let's see what else in revenue or in the income statement is your revenue, cash in. You maybe have different lines, so you'll have different revenue streams. It's important to keep those separate. Again, we talked about costs. It's important to have a line item for each major cost. And then at the end of the day, your income statement tells you if you've been profitable or if you're losing. The other thing about an income statement is it doesn't really have a lot to do with the cash you put in your bank in general. Because in an income statement, you're going to have non-cash items. For instance, a charge against earnings would be depreciation. Well, that doesn't impact what went into your bank. So there's a reconciliation that has to occur, and that happens in the statement of cash flows. So the statement of cash flow simply is 3 categories: sources, uses, and financing. There's more technical terms, but that's for what I want to use now. So the change in your balance sheet, so your change in cash from, say, November to December, you can see if you line up that account, cash in November, cash in December, the balance, there was a change in there. Your statement of cash flows tell you exactly what that change was. For instance, did you finance something? So you had proceeds from the bank coming in. That would be showing as an investment, or if you had your sales would be reflected as a cash flow, a positive cash flow. And then your payments against cost, they would show as a decrease. So a statement of cash flows is kind of a real unpopular statement, I would say, especially for people new to accounting and bookkeeping. But it's really a good, it's a good place to go and see where you're at in terms of cash and how that cash got there. So what are the essentials for a basic accounting system? First of all, I think it's important to recognize you as entrepreneurs or business owners, your competencies are probably not in bookkeeping and accounting. So that's all cool. That's good. What's important is for you to understand that somebody's got to do it. But don't let that distract you, if you can, from running your business and doing what you do the best. A reliable bookkeeping system is important to sustain any business and should be looked at as an investment. So at the very least, a business needs an accounting system that includes a numbering system that will allow accounts to be classified as revenue or expense or assets or liabilities or equity. That's called a chart of accounts. It's a simple listing of what the account name is and what it's used for. I like numbering systems. You don't necessarily have to, and QuickBooks have a numbering system, but to me, it's just an easy way to reference. You need a filing system for your receipts and invoices. When I was in public accounting, ranchers used to just bring us a shoebox full of receipts every year. So that was their filing system. There's better ways. Ideally, you would have a filing system for your receipts, but they've been entered into your bookkeeping system, and then you just really don't have to look at them again unless there's something that needs attention. You need diligence in recording the daily transactions of the business. It's just one of those things you got to do on a regular basis. If you don't have a lot of transactions, let it go a week, let it go a couple weeks. But the importance is recognizing that you need to be attentive to your books, and daily is best. You need a realistic budget that can be compared to actual results. We talked a little bit about that. Again, I mentioned that there's nothing mysterious about budgeting. It's simply a best guess. And if you're thinking about a business in any future terms, you've got a budget in your head already. It's just a matter of laying it down. Periodic financial reports and analysis that are useful to owners and managers. What do the people that work for you need? What do you need to see? Is revenue just your key? You know, that's fine. But you need somewhere to go and look to see, to see where you are. So you as owners know what you need to see, what you need to live by. Therefore, the reports you receive are not dictated by your bookkeeper, by your accountant, by your CPA. They're dictated by you. What do you want to see? How will you use them? Bank reconciliations, very important to know where you are, just like in your personal life. You need to have a reconciled cash balance that you can work from.
Vince, if we could take a couple of seconds, we've had a couple of questions come in.
Perfect.
First, what is the best filing system for receipts? You said a shoebox isn't really the best filing system. What do you suggest small business owners do to file their receipts?
That's a good question. It's not that the shoebox wasn't a bad way to do it. I would just think there would be better. So what I'm thinking is, you see these accordion files are a good way to start. You could list them by vendor, if that makes sense to you, who you spent the money for. But I would tend to go with a category. For instance, auto repairs. Let's just keep those in one spot. A for auto repairs. So really the question is, or the answer is whatever works for you.
Okay.
So I'm a kind of a fan of those accordion files. I just, in my consulting business, something comes up, I just file it away in that under a category. Did that answer a question?
Yeah, and we also have a comment. Someone uses expense tracker. It allows them to just take a picture of the receipt in an app. And then one other question we have here, are journal entries necessary for small businesses also?
You know, I think they are probably, I want to say probably more important than anything. Because your manual, you're going to be, I doubt you have systems that are, you don't have people processing invoices. Well, you do, I'm going to say, well, journal entries at the core have to occur in any bookkeeping system, yes. Now, whether it's a manual journal entry or something the system generates, you know, that's hard to say depending on what you have. So yes, journal entries are necessary for small businesses.
Okay, and going back to the receipt question, does it have to be a physical receipt or can it be a digital copy?
No, actually, I like that. I know there's a lot of technology out there. That's actually a good point to think about technology that can ease the pain or ease the burden of bookkeeping. So I've seen that where you take a snap of a receipt. Sometimes your system will recognize that and be able to do the journal entry for you right off the bat. If you have things set up that way. So yeah, I was talking about physical, like the shoebox or the file. I generally will scan things and just put those in a file on my computer.
Okay, so we're
So,
good with either
yeah.
way.
Yep, heck yeah, that's being smart, using an app to just take a snap.
Okay, and then one other thing, some accounting software other than QuickBooks, do you have recommendations or suggestions?
There's going to be a section coming up where I have some free and online things for bookkeeping. So I'd like to defer that and we'll talk about that. QuickBooks,
Perfect.
yeah, QuickBooks is just so pervasive in industry right now.
Right.
So, but there are other things, there certainly are. And then there's also just the fact that if you're good with Excel, you could manage things in Excel as well. That I probably shouldn't have even said that, but it's tempting.
Right. Well,
Any other
perfect.
questions?
I think we've answered what we have so far, so I guess we're good to keep going.
Good. So now let's think about accountants. Accountants, bookkeepers, CPAs. It'd be interesting as I said that, what's going through your head as entrepreneurs and business owners. So somebody earlier had a question about the difference between a bookkeeper and accountant. So we're going to approach that now. And if I don't answer it in its entirety, let me know. So bookkeepers are, they prepare accounts by recording daily transactions. So you would essentially take or have the mail go to your bookkeeper. They open the mail, they do the necessary transactions. And they provide an important role in the integrity of data that goes into the accounting system because that's what they do. They understand this character of cost would go to this account. They understand when to ask you a question about a transaction they may have seen. And the bookkeepers are responsible for keeping the general ledger in balance. So as I said, for every debit, there has to be a credit. There's good reason for that. And bookkeepers are very keen to that. Bookkeepers, there are several in Casper I know of, and they work with certified public accountants, they work with your bankers. So it's a good service to have. The question is whether you want to be a bookkeeper or not, because bookkeeping is really the gist of accounting. And depending on how busy you are, how many transactions you have, it could be very busy. Okay, accountants and controllers. Accountants and controllers generally work for a business. Probably not large businesses, necessarily corporate type, but substantial businesses that have a long history of being in business. They would employ accountants and controllers. Controllers, accountants create useful information from the bookkeeping transactions in the general ledger. They prepare financial statements. And they also act as the business advisor and advise owners on financial condition of the business. So they're thinking a little bit beyond the transactions. They're thinking of, okay, accountants and controllers would be the folks who would be looking at your budget and explaining variances. it's kind of, there's a real gap, in my opinion, between bookkeeping and your CPA firms where you're going to take generally your taxes to get the annual tax returns done. There's a real gap between bookkeepers and CPAs, and I call them accountants and controllers. They're the people that can come into your business and review with you your budget, help you through the budgets, help you prepare your financial statements, advise you on your financial condition, and do this before it goes to the CPA. So it's kind of a tough go to find accountants and controllers in the general population to come into your business. That's kind of been the gist of my consulting, is to fill that gap with, to give books a good overview at the end of the year or at the end of the quarter, and to make sure that taxes and things like that are calculated properly. So it's nice to have somebody come in once a month that has a little higher view than bookkeepers, just to make sure things are on the up and up. There are no glaring errors. CPA and CPA firms. CPAs are regulated by the state of Wyoming in affiliation with national organizations called the American Institute of Certified Public Accountants. So there's a test that you take, and then each year you're required to have 40 hours of continuing education. And then you pay a fee and you get a license to practice. CPAs provide attestation services or third-party assurance. So attestation service is a fancy word for auditing. So they'll go into a firm and audit their books and make sure that what the financial statements reflect is really what happened. Essentially, they'll audit the transactions that make up any given balance on a balance sheet or an income statement. CPA firms provide a full suite of services, including accounting, tax returns, planning, and bookkeeping. A lot of CPA firms do not do the bookkeeping or the planning aspect. They'll certainly do bookkeeping. They'll file your quarterly returns for your wages and your annual returns. But in terms of planning, I feel that they're kind of weak. For one, they don't know your business like you do. So a variance would mean very little to them. So just kind of keep that in mind. Enrolled agents is another term you'll hear. These are tax professionals that are certified to practice before the Internal Revenue Service. They're tested by the Internal Revenue Service, and there's certain requirements each year that they have to meet to maintain their enrollment. CPAs are also allowed to practice before the Internal Revenue Service. So to the person who asked about the difference between bookkeepers and accountants, I want to say that in some sense, there's not a lot of difference, because they're diligently working to maintain your general ledger, your business transactions, but they have the ability from their education to look more in a theoretical way, to kind of look at a bigger picture and advise appropriately. Any questions there?
I have a question on the same general tangent, but I get a question quite frequently from clients: should I hire an accountant or a professional bookkeeper? And so I wonder if we could at some point just talk a little bit about what the responsibilities of the business owner would still be, and how an accountant or bookkeeper or CPA could assist them, and what their duties could be. I realize that every industry will be different, but maybe just in a general view.
Mm-hmm. Well, I think with an accountant or a controller type person, Again, they're going to be looking a little deeper into your business. They're going to ask you more questions about the nature of your business so that they can relate that to what the books are saying, what the numbers are saying. Again, there's a story in each set of numbers. So that's a kind of a tough question depending on your volume and the stage of your business. If you've been in business for a year, are you just starting out? I would say for just starting out, to get comfortable with this whole suite of bookkeeping and accounting, I'm thinking a good bookkeeper would be the best way to go at first. And they'll be able to kind of guide you along, answer your questions, explain to you why this went there. But when you start getting into budgeting and forecasting and perhaps making, one thing I haven't touched on is making decisions based on an economic analysis. Say you want to go out and buy 5 trucks, pickup trucks, for whatever reason. There's a process you can go through that'll tell you if that's going to be a profitable venture or not. Do you need 5 trucks? Maybe you only need 4. So it's called an economic analysis, and accountants are apt to be able to do that as well. So if you're going through some decision points for making an investment, accountants and controllers are very good at setting up the evaluation. And then, of course, a CPA firm can tell you perhaps what the tax implications are regarding that as well. So, yeah, there you can see there's overlap. I just discussed overlap with bookkeepers and accountants, and then accountants and controllers. Most accountants and controllers have an idea, have a good working knowledge of tax. That's important because to advise any business, you have to have tax in the background, just so you don't end up paying more than you need to. Did that answer your question?
Yeah, it gave me some good insights on some questions that I can write down and recommend. Thank you.
You're welcome. Okay. What accounting system do you need or want? The options are this. You can hire a bookkeeper. You can outsource a bookkeeping. You can hire an accountant to create reports and analysis. Not to say that bookkeepers can't or won't, bookkeeping services won't produce reports. It's just the depth which you need to see things is the question. You can outsource to a CPA firm or to freelance controllers to manage at a little higher level your bookkeeping. You owners or entrepreneurs, you can learn bookkeeping utilizing user-friendly software. And then I mentioned QuickBooks and Excel. Below are things that I investigated. It's been about a year, but these are free online bookkeeping services. I'm sure, like everything else, the more you use it, there may be a subscription price. So there's a myriad of places on the internet you can go and get a good basic bookkeeping service. Estimated costs for accounting resources. These again, these are about 6 months old. I don't think inflation would have impacted too much these types of costs. But you could hire a bookkeeper from anywhere from $26,000 to $49,000. That was my research. That's on an annual basis, or $12.50 an hour to $23.50 an hour. But if you hire a bookkeeper, you've also got the wage reporting burden to state and federal governments. You're going to have to pay their share of Social Security, any other benefits you provide. You take on the risk of employment. Investment in a computer is going to be a couple $1,000 anywhere. And then software is probably the cheapest aspect. QuickBooks, I believe, is $150 a month, or you can buy a one-time subscription for $299. So you can outsource bookkeeping as another alternative. So just go down to your local bookkeeper, interview them if you like them, if it's a good fit for you, engage them at $12.50 to $23 an hour. You have no employee issues to worry about or to celebrate, I suppose. Payroll services, including filing and payment to governments. So if you've got a bookkeeper doing a bookkeeping service doing payroll, they take care of all the filings. That's something to consider. That's valuable. I think the easiest thing to do is fall behind in your payroll taxes. So that's always something to pay particular attention to. So owners can learn bookkeeping and utilize user-friendly software. We mentioned a few things above. QuickBooks, Accountinator, Wave, and Manager. Again, there's Excel. I use Microsoft 365. It's $100 a year for the whole Microsoft suite. So it's pretty good. Excel is a good tool to know. Can help you line out, especially if you are a low transaction company. Maybe, well, just to work things out in Excel. Maybe get some help setting things up, and then you're on your own. QuickBooks, that's an interesting thought. To somebody asked if there was alternatives to QuickBooks. I just can't think of anything that's even close.
When you say Excel on your previous slide,
Yes.
you said Excel, Microsoft 365. Is it accounting or bookkeeping software, or is it just a method of storing and organizing data?
Good point. It's essentially a database, or it's storing data and manipulating that data to create a financial statement. You're right. It's just pure Excel. It's data entry. And then, of course, it's a robust spreadsheet. So there's a lot of things you can do with macros and things like that. And yeah, you're right. It takes probably an intermediate Excel user, I'm going to say, to consider maybe doing your books in Excel. But yeah, Excel on its own is just simply a spreadsheet. At its core, made to add 2 plus 2. Did that answer your question?
Yes.
Vince,
Thank you.
sorry, we just have one other question. When you talk about outsourcing bookkeeping, are there any disadvantages to outsourcing to someone who lives in a different state than you?
I hadn't really thought of that, but let's think it through. One thing is just the forum that we're in. You could hook up to your bookkeeper in Juneau, Alaska. He'll be able to pull up reports that you want to see, need to see, or questionable transactions. I don't think it's important that they need to live next door or in the same city. As a matter of fact, there's probably some firms that are marketing that way. So to answer your question, Nexus isn't important.
Okay, perfect. And you could really do like a contract situation as well with them, so.
Yes, exactly. So let's see, where are we? I just went on to cost estimates, just to kind of give you a feel what kind of money you're looking at. To hire an accountant to create reports and analysis, a senior account level 40 to 75,000, and that's probably a low estimate. The value is in the ability to maintain records and provide timely reports. Accountants should be able to take care of your payroll, pay timely your wage-based taxes and employee risk. What was I going to say about? Yeah, that thought left me. So if you wanted to outsource to a CPA firm, essentially they're going to do your taxes more than likely. You're going to look at 150 to 400 bucks an hour, depending on how complex your tax return is. What drives prices for CPA firms up is the levels of review. So you would have a junior accountant probably preparing, say, a tax return. That's got to go to a senior accountant for approval or review, and then it goes to a partner for sign off. So you can kind of negotiate with them some of the pricing, which means that they would be relieved from having to prepare things under their standards, for instance, the levels of review. But they're pricey, but they do, you should have a high expectation that they're going to do excellent work and that they're going to use their time efficiently. Sometimes you think 150, 400 bucks an hour, that's a lot of money. The hours click by. But what most professionals can do in an hour is others would take 4 or 5 hours, for instance. So keep that in mind. And those are questions you would ask your CPA firm. So I guess I did make a note here, to outsource to a CPA firm, you could agree to have work done by a less experienced associate. So those are all kind of options. Freelance controllers, again, there should be a high expectation in terms of quality and an efficient use of time. So my guess is 40 bucks an hour for just basic accounting work, review, data entry. Rendering accounting data into useful reports and presentations to management, that's going to go up a bit, 75 bucks an hour. And then economic analysis, which is used to value your business or purchase decisions, project evaluations, that could be anywhere from 100 and 150 bucks an hour. And those are all kind of low prices, so on the lower end. So I think this is the last slide. And if you were going to go to a meeting with your accountant or a CPA, what do you need? How do you want to approach? So we haven't really talked about a business plan yet. That was just assumed that every entrepreneur, every business owner is going to have a business plan. Again, you've thought through it in your head. It's right there. It needs to just be in a narrative form. So you want to take to your accountant or CPA your business plan. You want to talk through it with them. A business plan should describe the aspects of your business, product or service you offer, where you're buying your stuff, your budget, what financing you may need, any investment analysis. Again, investment analysis is just a purchase decision. Do I need 4 trucks? Do I need 5? What do I really need? And how does that work out in financial terms? And a business plan is also changeable. It's continuous and it's a growing document. It's always kind of a compass to go back to and to adjust your sales, to rethink your original plans in light of current environment. So you want to let the CPA or accountant know what the status of your business is. Are you a fresh startup? Have you been working for a while, years, months, whatever? You want to take a sample of your accounting records, or at least let them know where your accounting data lies, whether that's in QuickBooks or some other system. A description of your accounting system is good to know from the other side, the CPA side. And also just keep in mind, a CPA is not going to think of your business like you need them to. That's kind of a heavy statement. They're going to try, and they're going to do you a good service, but nobody knows a business like you. And the more engaged you get with a CPA or an accountant, the better. It's all about knowing your business. So questions to ask. First of all, you want to be confident. You're the boss. You want to know if the firm you're approaching or the accountant you're approaching have businesses that are similar to yours? There could be some easy learnings in that respect. What services do you offer? That's what you would ask an accountant. Is it just tax, budgeting, advisory services? Ask them if they can be your mentor. Some firms will just say, no, we don't do that. But others, especially more of the freelance type accountants or CPAs, they may be good just to hang out with you a couple times a month, make sure things are going well, or to help you through a hard spot or whatever. It's important to articulate your expectations to your accountant or CPA. And that's kind of goes with the confidence as well. This is what you want. This is what you expect. Clarify what the accountant expects from you. What are your obligations to this business transaction? That you're going to provide them timely data when they need it. And so there's expectations on both sides. So what is important for you, the owner, to know? You need to express to the CPA, hey, I want to know what's driving my costs. I need to know what my cash position is, weekly, monthly, quarterly. What's the status of sales tax and wage tax payments? So just kind of think through what you want the accountant to do or CPA, and just express that. The other thing is, I have friends who are business owners, and some of them, bookkeeping is not important to them. For some reason, they kind of understand what's in the bank. And all they do is take a box full of receipts to their CPA every year, and a tax return is the first time they see how much they made, how much it cost them to make that, and what their tax bill is. So there's you could take that route as well. That's the end of the formal presentation. I hope you enjoyed that. I'm open to questions. Also, I believe you can download this presentation if you want to take it. I have an email on the banner screen. Send me some questions and I'll do my best to answer them. So any questions now?
I'm not seeing any right at this moment.
Okay. Well, shall we call that a wrap?
I think so. I think that might be the end. So thank you all for being here. And Vince, thank you so much for being here with us as well. That was really great information, and we really appreciate you taking the time to share with us. We do ask, we have a very short survey at the end of this. We ask that you please fill that out. It kind of gives us some insight into how we can better prepare our webinars and our trainings for all of you and what is of interest to you. And then additionally, I would also like to invite you February 16th at 11 a.m. We are going to have our next webinar, and that is choosing the right e-commerce platform for your small business. So please join us for that as well. Again, thank you, Vince, for being here with us, and thank you everyone else who came to join us as well. I hope you all have a wonderful Thursday, and we will see you hopefully next time.
Yes, thank you so much for all who attended. Appreciate it. Again, send me an email if you got questions. We'll get it answered.
All right, thank you. Bye.
Bye.